But let's come back home. We got our own heads to scratch around inflation. Lower on a year-on-year basis and slightly lower on a month-on-month basis. But food inflation is where the shoe is pinching Nigeria. We're up almost 21% year-on-year. That's very sticky. And this is the highest Nigeria has posted since the new series of statistics compilation started in the year 2009. We're paying more for egg, for bread, for yam, and for everything else in between, with the exception of petrol. There's a little bit tepid. Omotola Abimbola is one of the investment analysts from Afrinvest. Is live here in the studios. We're going to put the economy on the back of the market and vice versa. Good morning. It's good to have you. Let's start with inflation data. We don't have interest rate. We know where interest rate is. Correct. But when we look at inflation and we see these numbers on a base year basis, we're down. But when everybody thinks about is their belly.
Correct, you are right. Expectedly, inflation dropped for the 7th consecutive month to 16.05%. So that's down about 5 basis points compared to the previous month. But the less favorable news is that the pace of decline of headline inflation is underwhelming compared to market expectation. Before the data came out, analysts were expecting inflation to be around 15.95 to 16%. But if you look at the numbers now, that's higher by about 10 to 5 basis points. And the major reason why we are having this slow deceleration in inflation is majorly attributable to the food prices. Food inflation rose by about 30 basis points to 20.28% compared to the core inflation, which dropped year-on-year to 12.2% from 12.5%. So essentially, the increase in food inflation is offsetting the large drop in year-on-year core prices that we are seeing in the economy. And if you ask me why we are seeing these sharp increases in food prices, I would say it's due to both supply and demand factors. Supply in the sense that we have a seasonality period, which typically affects how prices of food is going to be moving in the economy. So during harvest season, prices usually come down, and during planting season, prices go up. So right now we are still, approaching the end of the planting season. So prices are typically higher during planting season. However, analysts were already expecting that with the beginning of harvest season, towards the end of last month, particularly for tubers, cassava and yam, we should probably be seeing a moderation in food prices already. However, what we are seeing is that the increase in demand for food items, right, is offsetting, that's expected increase in supply of food items, and that is particularly, attributable to 2 factors. First, because of the ban on the importation of some food items by the central bank, that has led to increase in demand for domestically produced food items, particularly for grains. And then we also have an external sector perspective to it as well. Nigeria typically supplies the whole of the Sahel region with grains, right? And with the depreciation of Nigeria's currency in the last 2 years, we have seen increase in demand for domestic produced grains, particularly from neighboring countries like Chad, like Niger, like Benin Republic. So all these factors, right, are affecting Nigeria's food inflation and as well as the headline inflation as well.
Do you think the markets will take anything from this economic data first thing on Monday morning to go into the this week's trading day, the final trading week in August, then we step into September around Friday?
We do not think so, because before the inflation figures even came out, market had already, held the consensus view that interest is going to be high in the short to medium term. If you talk to most analysts today, their outlook for inflation is, for interest rates rather, is that rates are going to stay high in the short to medium term, because what the central bank is looking at, in taking their decisions regarding whether, market interest rates or even the benchmark interest rates is external sector stability. They are focusing more on the FX markets than inflation. However, with inflation numbers disappointing in the past 7 months, because if you look at year-on-year headline inflation in the past 7 months, it has been coming above analyst consensus. So with the trend, further continuing, that probably further reinforced the market's view that interest rates are going to stay, at current level.
We're going to be into the September monetary policy meeting in about 4 weeks from now, technically speaking.
Correct.
So what do you think this inflation data, and of course by then we'll have August, we ought to have August on the table by then. Do you think, how would this reinforce Godwin Emefiele's position as far as the FX is concerned, as far as interest rate is concerned?
I guess for MPC members, they're going to take the inflation reports, they will take the positives out of it and the negatives out of it as well. Positives in the sense that monetary policy is mostly concerned about core inflation, right? And thanks to the CBN policies on FX availability and liquidity, we are seeing core inflation dropping almost on a monthly basis. So now we are down to 12.2% from 12.5%. So that is thanks to CBN policies. However, with the pressure we are seeing on food items, which typically is not the purview of monetary policy, right? That will probably still complicate the response of monetary authorities. So for us, we do not expect any change in all the monetary policy variables, by the central bank at the September meeting and even at the last meeting for the year as well. Because even if you look at the current benchmark interest rate at 14%, it is significantly below the market yield, right, of 18.5% for the 1 year, Treasury bills paper. So if there's going to be a change in interest rates policy at all, it will first come from the market side before the MPC will take a decision on causing, benchmark interest rates. So for us, we expect no change at all these meetings.
No change. Central Bank will keep to the FX side of things. In terms of fixed income, you think that is going to remain there. As far as equities is concerned, you think the market is still for a good run?
For equities, we believe that the momentum by which the market has been gaining is going to slow down. If you look at what the markets did in June, the all-share index returned above 8% in June, but in July, that fell to about 2.3%. So that shows that market is taking a much more cautious view of equities right now. So we do not expect a significant rally, in the month of September, probably a flattish month for us.
Okay, that's the view from Afrinvest. Thank you very much. That's one of the members there. Omotola Abimbola, one of the investment research analysts from Afrinvest.